So in the last section, we talked about all of your different options that you have available to go out and invest with your IRAs and your 401ks once they've been transferred into a self-directed status. And one of the ways that SLM Advisors has its clients invest is in private money loans. And you might ask the question, what is a private money loan? And it's an actual loan that's made to a real estate investor. And this loan is secured by the actual property that the real estate investor purchases. And right now you have a lot of available foreclosures that are on the market that are undervalued properties. So a lot of opportunities out there for you to get hand in hand working with a real estate investor where they can give you a higher rate of return on your investments. And typically these loans that they give out have very low what they call loan to value, or LTV, okay, loans. And they're very low loan to value, meaning 50 to 75% of the value of that property. So for example, if a property appraises for $120,000, SLM Advisors and its subsidiaries could buy that property for $90,000. That's a 75% loan to value. The value of the property is $120,000. The loan on it is $90,000. So the loan to value $90,000 to $120,000. That $90,000 is only 75% of that value of the property. So it's a very, very, very safe loan because there is so much room left in the loan. And I'll take you through a few examples. And here we have an example of how the private money loans are structured, and we really like to call this and want you to consider this as your safety net, okay? And this safety net, that 25 to 50% safety net, because our typical loan to values are only 50 to 75%. And that 50 to 75%, which you see here on this graph, that first one is a 50% loan to value. The second one is a 75% loan to value. The third example is more of like what the banks are willing to lend on properties. And you see that there's a lot more wiggle room, that yellow there that you see, for the investor, so that if something were to happen, which we'll be talking about, they are protected because their loan is secured by the real estate, and it gives them additional security. So if the house appraises are for $120,000, you know, SLM Advisors could buy it for $90,000. That's 75% loan to value. And there's also an example, the 50% loan to value, and the banks typically will lend up to 90, 95%, or even 100% of the value, and they are willing to take a lot more risk. You, as the private money loan lender, you will not lend more than 50 to 75% LTV no matter what. You're making a very safe loan, and you should never, if you ever decided to do a private money loan outside of SLM Advisors, that's fine. But you should never make a loan without a 25 to 50% safety net. And that's a rule that SLM Advisors and its subsidiaries do not violate. We will not violate that rule, so that you become the winner. And you'll come out the winner and put yourself in a position where you will end up making money. Okay, and again, reiterating, we do not violate that rule. Okay, so with these private money loans, we usually have frequently asked questions. They the first thing they hear is real estate and it's to a real estate investor and questions about how am I protected, a number of different questions. So with these frequently asked questions, we're going to go through a whole section on that. So the next section coming up is a frequently asked questions section on the private money loans.